As we were just saying there, ending on a reasonable note, not negative and certainly well off the session lows. Ali, do you think it's right that the market continues to be so resilient, only a couple of percent from the record highs in light of quite a few challenges from supply chain issues, Delta variant and talk of tapering?
Yeah, today was a Delta Dent day, and as everyone has said, it was done during, a seasonally difficult month with pretty low volume. Other concerns have been elevated. You also have one thing that hasn't been mentioned, which is this is the week of options expiry. And look, I mean, as everybody has continued to point out, we have had a market that is up 100% since its lows in March of last year, post-pandemic. It is even up over 30% over its pre-pandemic high in February. So, yeah, we have a little bit of trepidation. We have some concerns about the speed of growth as Delta permeates this country and others. And we have, a very, very transparent Fed, but one that has a big meeting next week that will likely be very affected by this conversation around Delta and slowing growth, like the numbers we saw come out of some investment banks today. But, to points that have been mentioned, all that means to me is that now I don't have to fight against buying on another day that's a high. I actually have a time to get back into cyclicals, back into small caps, and I can ride what I think will be a little bit defensive for a while. But also, when you think about defensives, right, we have a market right now that is so healthy in terms of the earnings of individual companies that UBS is forecasting that the buyback and dividend policy of most companies, is going to expand about 30%. So if you think about expanding the dividend and cash flow that you're getting from equities in a market where you can get hardly anything from bonds, this just says to me that it's a time to buy and to buy for yield and to buy for cyclicality.
It's a good point. A lot of the retailers are reinstating their dividends in a sign of confidence. Some boosting buybacks. We're going to talk to Tapestry CEO a little bit later on. Steph, the earnings are still coming in quite strong, and the outlooks are raised and strong. So how do you put that next to some of the weaker economic data we've gotten lately, like retail sales and consumer confidence and some of the other places where Delta might be showing up?
Yeah, and I know everyone's paying attention to retail sales, but remember, retail sales, just from a year-over-year basis, it's still up 18%. So I think the consumer is just fine. I think earnings, you're right, have been great. Are they going to be up 85% year-over-year going forward? Absolutely not. But because I think the economy has legs, and there are enough good parts of the economy, not all is perfect, to your point, but I think there's enough that's good, and that's mainly consumer, parts of manufacturing, jobs, jolts. So all of that stuff should lead to better growth, above trend growth, better earnings growth. And if earnings are going higher, stocks usually follow, which is why I am looking at some of these cyclicals and reopen names, because almost all of them reported better than expected numbers, and numbers actually went up, and yet the stocks have fallen dramatically. So I think that's where you get your opportunities to buy low, and you can trim some of these other stocks that have actually really rallied in the face of this rotation.
Paul, what's your take on dividend buyback stocks?
Yeah, so I mean, I think the buyback is going to be a strong demand for equities. It's going to create more demand from other sources. So we talked about rotation earlier in terms of sector performance. Now we're talking about rotation in terms of where the buying's coming from. And as companies increase their buyback programs, that's going to create demand. You've been talking about it for several weeks, how that's a source of demand going forward for the market. In the shorter term here, I think Ali brought up a good point about earnings being very strong. Now earnings season is over, or essentially over, so the market's going to find itself in a bit of a holding pattern and sort of a hangover after this strong earnings period, searching for the next catalyst. And August, again, is a slow time of year. So I think until we get a catalyst, whether that be reduction of the COVID burden in the U.S. and the Delta variant, or maybe some more dovish commentary from the Fed after some fears that they're going to be more hawkish than previously thought. Those could be catalysts for the market moving forward. But I think an important thing to think about here is the intraday pattern of the market. We saw a little bit today, not so much yesterday. But what we've seen since June is we've seen the market trade consistently strong throughout the day and then pick up strength towards the end of the day, and then that's a big contrast from the first 5 months of the year where we would see sell-offs in the last hour of the year. So I think there's strong demand for stocks. People are willing to step in on weakness. We saw that today. The S&P finished up. Go.
I was just going to ask, Paul, if that was your pitch for Mike Santoli's job whilst he's not here. I mean, I know you haven't got a telestrator, but
someone has to pick up the slack, when he's out on vacation. I mean, the nerve of him going out of the office, right? I mean, but it's the best I can do without the fantastic technology on set of CNBC.